Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 24th of September. All right, let's just have a look where the major currencies open up Monday. Now, like most Mondays, the currencies lose momentum over the weekend, and that's when we've got several geopolitical issues sort of humming away in the background. There's about two or three of them which have really sparked up over the weekend, and we have seen a little bit of obviously a disconnection from Friday's trading and some major moves. Now, sterling. The news out there, they're talking about a snap election in November to try and sort out the major Brexit impasse they've got. The UK can't decide on what their plans are, and the EU are suggesting that no deal, this Northern Ireland border situation and et cetera, is just creating a huge amount of kerfuffle. So apparently almost a potential snap election. I think if Labor get up, they'd probably be trying to reverse Brexit, which would be just completely insane. But we have seen basically the talk of no deal. Sterling's dropped a couple of hundred points, back down to 130.75. Now, the market at this stage, I mean, of course it's going to have negative sentiment, but no one really wants to touch it here. It's in the middle of nowhere. When you're looking at the other pairs, a little bit of gap here on Aussie and Kiwi as well. Now, that's to do with China. They've come out over the weekend saying that they're not going to send any delegates to Washington to talk about trade. They're over the whole situation, right? So now we're getting back to an impasse there. Now, whether they take things into their hands, who knows? But let's say Trump is ready to sort of increase the tariffs. That's just going to continue. But we have seen a disconnection with the price action from Friday and a bit of bearish activity initially on the open. Euro, well, it's sort of enjoyed that little rally to the top side. Stalled up there around 118 and now back at 117.45. To me, it's still in a bit of a bullish mode. It's sitting on the sidelines, just getting benefit from an overall weaker US dollar, although it hasn't gone too far. Now, dollar yen just slowly still climbing to the top side. We've got a really nice trend line here to either use as a potential opportunity to buy dollars or even sell on a break. Now, the one key thing is when you are starting trading today, it's a Japanese and Chinese holiday today. So liquidity will be less. There's probably less trade activity as a lot of volume will be out of the market. And the market will be sort of trying to work out what's going on with all these various geopolitical events. Now, before I get into those, let's just have a look where the big currencies are, I guess you could say. The dollar index, okay, last week broke down through 94.40. It's had a bit of a clean out of stops. You can see that swift move. Started trading sideways. And then with sterling coming off, of course, it's rallied up. Hasn't gone too far, though. And you're still looking for it to get above probably 94.80 before you think it's on the way back up. Now, there's a number of different geopolitical issues impacting the US dollar, so it's hard to say if this thing's going to go up or down. Technically, to me, it's still going down. Now, dollar yuan, right? Now, there's a lot of talk, there's a lot of speculation that the People's Bank of China, the Chinese government are manipulating dollar yuan. So what we're seeing at the moment, here's that gap in the market. It's probably like 100 points on the open as they have come out and said, we're not going to, dance to Trump's music. So basically, it's a bit of weakness, dollar strength there. Although, once again, it was pretty short term. And if I actually just go and blow that up to where we are, you'll see that you see that gap in the market, and basically the market is now trying to work out is this just another random news release, and which will be corrected tomorrow. As I said, it's a Japanese Chinese holiday, so maybe we don't see too much activity there in the Asian session. We may see more activity during the US session. Equity markets pretty flat to me. Dow Jones up 0.3, Nasdaq down 0.5. If you have a look at the odd thing out to me is look at the bounce here in Chinese equities up 2.5% and 3% on Friday. It's like I don't see it. These tariffs are going to start impacting. If they're not, then the Chinese government's just going to depreciate their currency through the roof, and that'll offset the tariffs. I mean, that's the only thing they can do. So we're going to keep an eye on that. Now, coming back to sterling. As you come into Monday and you do isolate a pair that's had a major move, you really want to dig deep and find out what's going on. Now, the pound plunges after no deal Brexit fears. If you go into that story and you have a look through, I mean, this is what sterling has been sort of bouncing around the last few days, the last 2 or 3 days on the same news but different reports. Okay, report there was going to be no deal on the Northern Ireland border issue. Next day it was all going to be hunky-dory. The UK data was strong. We get it to shoot up 200 points. Looks like it's going to go to 135. Next thing you know, it comes out that there's a whole, the EU have said, no, we're not going to do a deal on Northern Ireland. A bad deal is better to do no deal than a bad deal. And that's seen sterling come off. And then you start to get into the bits and pieces of it. And they're talking about a potential November snap election in the UK. Okay, so you want to keep an eye on this. It's going to build this story. The Labor Party, I think, have come out and suggested that they would consider another vote on Brexit, repealing Brexit. Okay, so it's all crazy. Everyone just needs to, as Theresa May's been saying, everyone needs to come down to the UK. Let's get a deal or no deal. Let's just get out of this because it does look a bit stinky to me. So anyway, what have we got going on? We've got Brexit, obviously creating a huge amount of issue for sterling and sterling crosses. OPEC, once again, oil moving to the top side. There's this, talk about considering output boost. That doesn't look likely. They've taken Iranian out of the international markets. Russia's arcing up, saying we're not going to increase supply. So there's a whole heap of crap going on with oil. That obviously impacts dollar CAD very closely as well. And going on dollar CAD, we did have the inflation numbers on Friday. Now, if I just bring you back across to have a look at the numbers there. One thing you want to do when you start Monday is actually have a look at the data Friday, see what major data was out, and if there's and see what the impact was, so you know where the initial momentum is. Now, oops, I just lost my spot there. Let me just go back up. The main part of the inflation numbers I took out of Friday was there wasn't much in it. Now, some of the reports in the media are saying, the strong inflation number supports a hawkish Bank of Canada. Well, they were already in a hawkish mode. Inflation was at 3% last month. I mean, it's at 2.8%, which is still above their 2% target. But really, the numbers weren't huge, although they were consistent. So, and then you come back and you go, well, I've read that report. Now, if I look at the currency pair, you look at dollar CAD, this is the impact from the Canadian numbers. It's pretty much trading sideways. It has done the last 3 or 4 days. A little bit of a blip up and down on the release of the data, but basically all in all, pretty much business as usual. The one thing to keep an eye on here with dollar CAD is oil. I've got it inverted on this dollar CAD chart. It's now at 71.50, which almost would support a lower dollar CAD. All right, so that's what you really want to be keeping an eye on there. With the other pairs, now, what are we going to be playing at? Now, as I said, it's a Japanese-Chinese holiday. Coming into this session here, we have that initial gap here on the Aussie and the Kiwi with the Chinese news. Now, we may have to wait an extra day to really work out what's going on here, or if this is just another ploy by the Chinese or the media to sort of arc up and increase, the activity or whatever it is. I mean, it's just very hard to call because you've got OPEC and NAFTA, by the way, impacting the CAD. We've got the US-China trade tariffs. We've got, and that's impacting not only the US dollar, also the Aussie Kiwi, and then we've got the Brexit issue impacting sterling. The one currency that is just sitting along, just cruising around is euro. So to me, it's probably almost like a bit of a safe haven trade because you've got good technical levels. It is trading nicely technically. When we do see a US dollar move, it sort of just slowly filters into the dollar CAD and we go from there. So don't forget, the one thing that is sort of popping euro up somewhat is euro sterling, right? Obviously a big move down in sterling. Euros come up a little bit, so euro sterling through the roof there as well. Now, if you have a look across, there's a potential setups here on the yen crosses. All right, if I just bring you back across to the yen crosses, having a look here, you can see the gap and wild price activity here on Aussie yen. Obviously, no Japanese market's going to take a lot of liquidity out of the market. You can see that little gap there in Kiwi yen. Now, dollar yen, this is a really nice sort of short-term support line. We've got a really nice level here to be looking to trade off. Monday, no Japanese market, no Chinese, a little bit of geopolitical events maybe not the best idea, maybe best to wait. But we do have a nice setup, and you can see the aggressive move down here in sterling yen. We may see something nice here in euro yen. You'd expect, well, the price of oil's going up, so CAD yen should continue higher. But it's all going to come down to the dollar yen. Okay, now I thought last week an increase in trade tensions between China and the US would see dollar yen lower. We didn't see it, and the market has fully discarded that. So I'm not really sure yet how to play that trade. What I'm trying to focus on is the major pairs and the pairs that do make sense. All right, and this is where you can come back to the MyFX Trading Hub and sort of really work out a couple of things. You want to plan your week around, say, some of the core major releases, and we don't have a lot until sort of pretty much Wednesday. That's when the market's really going to turn on. Geopolitics overshadowing the market, so just be aware that trading it's liquidity in the market. They're moving okay, but the news that's driving the market is not fundamental. It's all geopolitical crap. So you got to be aware of that. So looking at the upcoming events, we're going to fair amount of time to wait until we get the US consumer confidence numbers. That may give us a kick. I really like this week the Kiwi ANZ business confidence numbers. Now, the RBNZ highlighted and focused in on this and said, our biggest core problem is business confidence. If that continues to fall, we're going to have to inject some confidence in it, which means they're going to have to cut rates. So this number here could potentially be one of our best opportunities this week. The Fed, we are still expecting the Fed to raise interest rates. Well, let me just clear that screen there. What do I do with the thing? So the Fed's going to be obviously a talking point. With all these geopolitical events, this could be really pushed aside somewhat. The interest rate hike has been factored in, so you're really going to be watching the statement and also the press conference from Jerome Powell afterwards. Then you've got the RBNZ after that. So what we're looking for is we've got a really good situation where we get the raw nerve of the Kiwi market that the RBNZ's highlighted. We get a direct look at this, and then 2 days later, or a day later, they get to come out and basically give us the answer. So the business confidence numbers, if they're extremely weak again, then I'm going to start thinking we're going to see a potential interest rate cut in New Zealand. That's pretty exciting. And then you've got the RBNZ afterwards telling us why they've done what they've done. So there we are. So the week is a little bit sporadic. We've got holidays in China, Japan today. You come down to the major pairs. Now, I was talking about this on Friday. We do have a situation where the geopolitical events or issues were really driving through some of the longer-term technicals. Now, to me, Euro is still bullish. It's broken up on the hourlies. It's broken up on the dailies. So it looks like it's going up. But there's nothing else behind it except the geopolitical events, which is driving the US dollar lower. On the hourlies, I've got the US dollar sort of going sideways. But you know what? The daily and weekly charts are still down. Dollar yen, I've got bullish, but it's just barely. It's broken higher on the hourlies and it's right at the key level, just above it on the daily and weekly. So it's pretty unconvincing. This is only just bullish. I've got dollar CAD back into a sideways trading with the short-term charts just trading sideways the last 3 days. Makes sense. And dollar Swiss still on a bearish sentiment. Aussie and Kiwi, well, we've got various situations here. The fundamentals for me, central bank are down, but the technicals are up on the Kiwi and the Aussie. Well, hourly charts are up. Daily charts are still just hanging there down. We've got a big level at 73 the figure, and that's sort of holding that thing in a sideways. And sterling, that massive pullback, 200-point move has driven the daily charts back into the range, and the hourly charts, of course, down. So we've got a pretty mixed sentiment there on sterling, and that's at this stage, that has taken over, dominating the media. It's dominating the US-China trade situation because it is pretty big. And if they do call an election in November, it's going to be a huge event, especially if, once the political parties start rallying and they put the fear into the UK population, we could see anything happen there, especially if the Labor Party get up. So to start the week, focus on the core events, right? These core events, you can almost sort of plan out the best opportunities. It'd be interesting to see how this consumer confidence number comes out, although for the US dollar, the FOMC is going to be the prime game. I would expect some sort of comments from Trump with regards to China's announcements over the weekend to not send delegates and all this sort of stuff. The better trading opportunity may be around this Kiwi ANZ business confidence numbers, because it may just give us the answer that we're looking for on the Kiwi interest rate decision a day later. All right, so that to me is a pretty prime example of where you can focus your attention. So when you do look at the charts and you're like, well, I can't see too much here, you know, you look at some of the levels. The Aussie's got a really good resistance level up here at 73, the figure. This is pretty long term. If I just give you a look at the longer term charts while I'm here, okay, this is where you can get a little bit more perspective around where these currencies are going. And you can see the Aussie's actually got a really nice resistance line, has just tested that level. Now, the fact that China are sort of saying they're pulling out of any trade talks with the US suggests Aussie and Kiwi will go lower. You can see that nice clean out after the Kiwi GDP figures, I think it was Thursday. It did really run with that weaker US dollar as well. It's still up there. Dollar yen just chiming away. Euro, well, it's broken through that resistance level. It is just trading sideways, but you know, now it has got a little bit of an upward bias. And sterling, you can see how that snapped right back into the range. So probably at this point on the longer term charts, it's probably time to raise our resistance line there. And you're probably almost drawing in your new support line after those recent lows. So back into the range for sterling. Dollar CAD, well, you know, it's trading sideways here, but it is below the daily line. We're getting mixed technicals here. On the weeklies, it's sideways, and on the hourlies, it's sideways. So dailies, it's broken down, but it's not getting the support from the other time frames, and it is a bit pretty much oversold. So we'll see how that plays out there as well. All right, guys, so fair bit to go through there. Just have a look at your, I was going to say, have a look at the news pages. If I just come back across, one thing that you want to do is really focus on, okay, if you can isolate the news, right, what is creating unorthodox price movement, and that's, you know, you're looking at Brexit, mainly US, China, it's almost settled down. The markets are almost sick to death of that. OPEC, that's just a slow burner as well. It's not like a massive immediate impact on dollar CAD. What you can do is, if you think sterling's too wild and erratic and the news is too random, take sterling out of your equation and focus on the other pairs that do have clear direction. To me, dollar Swiss is actually one pair that does look pretty good at this stage. All right, guys, that's it from me. There's a fair bit in there, but main thing is take it easy. As I said, the markets will not be trading normally as such today, with liquidity out from China and Japan, more importantly, Japan. So we do have a bit of time to wait. The major news is going to be really starting on Wednesday, and that's when we get into the FOMC as well. So just cool your jets, I think. Let these markets open up and see what comes about from the various news. Especially, you got to wait for Europe, for the media and everyone to wake up. That's where the talk is going to be, especially with and North America as well, with the China situation. All right, guys, have a good trade day. We'll plan your week. I'll see you in the trade zone. All the very best. Cheerio.